Hello, welcome to Knowledge Time. Here we strive to bring you the latest and greatest in knowledge and personal development. In today's world, it is more important than ever to understand the various ways that we can build wealth and financial security for ourselves and our families. Investing is one key way to do this, and it's no secret that the rich tend to invest differently from the poor. But why is this the case? And what can we learn from these differences? In this video, we will explore some common investments that the rich tend to make as well as those that the poor tend to make. We will also discuss the potential returns, risks, and other characteristics of this investment and examine the factors that may contribute to the differences in investment strategies between the two groups. It's important to note that this video is not meant to be a judgment on either the rich or the poor, but rather a discussion on common patterns and strategies. Whether you are just starting out on your financial journey or are well on your way to building wealth, we hope that this video will provide valuable insights and inspire you to think about your own investment strategy. So, let's get started.
First of all, it's important to note that there is no one-size-fits-all answer to this question. Different people have different financial situations, goals, and risk tolerances, and what works for one person may not work for another. However, there are certain things that the rich tend to invest in more than the poor, and understanding these differences can be helpful for anyone looking to build wealth and achieve financial success. Stocks. One thing that the rich tend to invest in more than the poor is stocks. Stocks are a type of investment that allows you to buy a small ownership stake in a company. When the company does well, the value of your stocks goes up and you can sell them for a profit. The rich tend to invest in stocks because they can potentially earn a high return on their investment. However, stocks also come with a high level of risk, as the value of your investments can go down as well as up. According to a study by the National Bureau of Economic Research, the top 1% of earners in the United States hold most 50% of all stocks, while the bottom 50% own just 1%. There are several reasons why the rich are more likely to invest in stocks than the poor. One reason is that stocks require a certain level of financial knowledge and expertise to understand and manage effectively. The rich tend to have more access to financial education and resources, such as financial advisors, which can help them make more informed investment decisions. They may also have more time and resources to devote to researching and monitoring their investments. Another reason why the rich tend to invest in stocks more than the poor is that they often have higher risk tolerance. The value of stocks can fluctuate significantly over time, and there is always the risk of losing money. The rich may be more comfortable with this level of risk because they have a larger financial cushion to fall back on if things don't go as planned. In contrast, the poor may be more risk averse because they have fewer financial resources and may be more reliant on their investments for their livelihood. Despite the potential for high returns, investing in stocks is not without risk. The value of your investments can go down as well as up, and there is always the possibility of losing money. It's important to diversify your portfolio, which means investing in a range of different stocks and asset classes to reduce risk. It's also important to have a long-term investment horizon and to be patient, as it can take time for stock investments to pay off. Real estate. Another thing that the rich tend to invest in more than the poor is real estate. Real estate includes things like houses, apartments, and commercial buildings. The rich tend to invest in real estate because it can be a stable and profitable investment over the long term. Real estate can also provide a stream of passive income through rentals. However, real estate can be a risky investment as the value of properties can fluctuate based on market conditions. According to a study by the National Association of Realtors, the top 5% of renters in the United States own over 60% of all investment properties. There are several reasons why the rich are more likely to invest in real estate than the poor. One reason is that real estate requires a significant amount of capital to invest in, and the rich tend to have more disposable income and savings to put towards real estate investments. They may also be more likely to have access to financing, such as mortgages or loans, which can help them buy properties. Another reason why the rich tend to invest in real estate more than the poor is that it can be a stable and reliable investment. Real estate tends to appreciate in value over time, and it can provide a steady stream of passive income through rentals. The rich may also be more likely to invest in real estate as a way to diversify their portfolio and reduce risk. Business. A third thing that the rich tend to invest in more than the poor is their own businesses. Many wealthy people start their own businesses or invest in existing ones as a way to generate wealth. Starting a business can be risky, but it can also be very rewarding if it is successful. The rich tend to have more resources, such as capital and connections, to invest in and support their businesses, which can increase their chances of success. According to a study by the Small Business Administration, over 80% of businesses owned by the top 1% of earners in the United States are self-employed or small businesses. There are several reasons why the rich are more likely to invest in their own businesses than the poor. One reason is that starting a business requires a significant amount of capital and resources, which the rich may be more likely to have access to. They may also have more experience and expertise in business, which can increase their chances of success. The rich may also be more willing to take risk, as they have a larger financial cushion to fall back on if things don't go as planned. Another reason why the rich tend to invest in their own businesses more than the poor is that it can provide a potentially unlimited source of income. If a business is successful, it can generate significant profits, which can be more reinvested and used to create even more wealth. The rich may also be more likely to invest in their own businesses as a way to diversify their portfolio and reduce risk. Starting a business is not without risk. However, there is always the possibility that a business will not be successful, and there is a high failure rate for small businesses. It's important to have a solid business plan, conduct thorough market research, and be prepared for the challenges that may arise. It's also important to be persistent and to have a long-term vision, as building a successful business can take time and effort. Private equity and venture capital. Private equity and venture capital are types of investments that involve providing capital to small businesses in exchange for ownership stakes. These investments can be very lucrative if the businesses are successful, but they also carry a high level of risk. The rich tend to invest in private equity and venture capital more than the poor because they often have more capital to invest and a higher risk tolerance. Collectibles and art. The rich may invest in collectibles and art as a way to diversify their portfolio and potentially generate returns. These investments can be volatile, however, and it's important to do thorough research and due diligence before investing. It's not uncommon for wealthy individuals to invest in collectibles and art as a way to diversify their portfolio and potentially generate returns. Here are some rich people who have invested in collectibles and art. David Geffen. Geffen is a billionaire media mogul who has amassed a significant collection of modern and contemporary art. His collection includes works by artists such as Jasper Jones. Lawrence Graff is a billionaire jewelry designer and a collector who has amassed a significant collection of diamonds and other precious gemstones. He is known for his collection of rare and valuable diamonds, including the Graff pin, a 24.78 carat the pink diamond that he purchased for $46 million in 2010. Steve Wynn is a billionaire casino mogul and art collector who has amassed a significant collection of modern and contemporary art. His collection includes works by artists such as Claude Monet, Pablo Picasso, and Mark Rothko. Luxury assets. The rich may also invest in luxury assets such as high-end cars, watches, and jewelry as a way to show off their wealth and status. These investments may appreciate in value over time, but they are generally considered to be more for pleasure than for financial gain. Here are some rich people who have invested in luxury assets. Roman Abramovich is a billionaire businessman and art collector who is known for his collection of luxury cars. His collection includes a Bugatti Veyron, a Lamborghini Aventador, and a Bentley Continental GT. Paul McCartney. McCartney is a billionaire musician and collector who is known for his collection of luxury cars. His collection includes a Mercedes-Benz SLR McLaren, a Ferrari 599 GTB Fiorano, and a Lamborghini Gallardo. David Beckham. Beckham is a billionaire retired soccer player and collector who is known for his collection of luxury cars. His collection includes an Aston Martin DB9, a Rolls-Royce Phantom, and a Lamborghini Gallardo. One important aspect of investing that the rich tend to focus on more than the poor is diversification. Diversification means investing in a range of different assets, such as stocks, real estate, and other investments to reduce risk. The rich tend to diversify their portfolios more than the poor because they have a longer-term horizon and are more focused on building wealth over the long term. In contrast, the poor may be more focused on meeting their immediate financial needs and may not have the resources or the time horizon to diversify their investments as much. The rich may also be more likely to invest in assets that are less liquid, meaning that they are not easily converted into cash. These assets can include things like real estate, private equity, and venture capital and collectibles. These investments may be less liquid because they are harder to sell or because they are not as widely traded as other assets. The rich may be more likely to invest in this type of assets because they have a longer time horizon and can afford to wait for investments to pay off. Another important factor that the rich tend to consider when investing is taxes. The rich tend to be more aware of the tax implications of their investments and may be more likely to take advantage of tax deductions and credits. They may also be more likely to use tax-advantaged investment vehicles such as the 401k plans and individual retirement accounts (IRAs) to reduce their tax burden. The poor may be less aware of these tax considerations or may not have the resources to take advantage of them. In addition to these financial considerations, the rich may also invest in things that are more intangible, such as education and networking. The rich may be more likely to invest in their own education or in the education of their children as a way to increase their knowledge and skills. They may also be more likely to invest in networking by joining professional organizations or attending events as a way to build relationships and make connections. These investments can be valuable in terms of personal and professional growth, but they may not generate a direct financial return. Overall, the rich tend to invest in a range of different things that the poor may not, including stocks, real estate, private equity and venture capital, collectibles, luxury assets, and intangible investments like education and networking. These investments can be risky, but they also have the potential to generate significant returns and wealth. It's important to understand your own financial situation, goals, and risk tolerance before making any investment decisions, and to diversify your portfolio to reduce risk. With the right approach and strategy, anyone can work towards building wealth and achieving financial success. Thanks for watching this video on what the rich invest in that the poor don't. If you found this video helpful, please give it a thumbs up and subscribe to our channel.